How to grow a small trading account fast. Let's get it started. All right, so I turned $83 to $2,000 in just 1 hour. All right, so in this video, I'm going to be showing you how to grow a small trading account fast. And I recently turned $83 to 2,000 plus dollars in 1 hour. And I'm going to show you how I did it. I'm going to show you how you too can also grow a small trading account for those of you that don't have, that your main problem is having capital to trade. I'm going to show you how to grow or how I grew my own small trading account from $83 all the way up to $2,000 in just 1 hour, right? Trading gold. Now, for those of you that don't believe, you say, okay, this guy must be lying or blah, blah, blah. Here's proof, right? So I posted this on my Instagram, right? I posted this on my Instagram when I recorded it as the trade was going on. So if you look up here, you can see, although my battery was low, like 6%. If you look at it here, you can see $83. It was actually $100, but the commissions that they took from the accounts because of the lot size reduced the account to $83, right? So took it from $83, as you can see here, 1,900. I think it eventually went to 2,000. Yeah, it eventually went to 2,000 if you play the video, right? So you can see from $83 here. As you can see here, if you pause the video, you can see real accounts, right? So it's a real account. It's not a demo account as most people like to portray, right? So it's a real account. If you notice, I also said don't try this at home because it's not really something that I would recommend anyone to do consistently, right? If you have, especially if you have a large sum of money, I won't recommend you should try this. But if you have a small account, it's possible and you can try it out. All right, so this was how I stacked up the trades. I'm going to be showing you how I was able to do this. Right, you're going to see a lot of trades on the screen here. All right, so this was the trade. This was on gold. All right, stacked it up, and you can see here, $2,000. It went to $2,000, more than $2,000, right? From $83. So yes, it is possible you can grow your small trading accounts, and I'm going to be showing you just how to do that in this video. So make sure you watch this video to the end, pay close attention, and let's get this started. Follow every instruction that I tell you in this video, right? So yes, it is possible to grow a small trading account, although it is not recommended, right? It's not recommended because it's basically you taking high risk, but it's on a small account. So um, it is. I won't recommend you should do this on a big account. Don't try this on a big account, right? Only do this on a small account. Right? But if you know what you're doing, then it's fine to grow a small account, right? It's fine to do this. Now, me personally, this $83 or the $100 that I put in here, if I lost the money, it's no big deal, right? I won't feel anything. It's just the money that I just wanted to play with and just see if I could do this, right? So it's just money that if I lose, I'm comfortable, right? So don't invest money that you're not comfortable losing, right? So quick disclaimer before we begin, before we dive deep, all right? I do not promote gambling, and trading is not for everyone, right? So I do not promote gambling. I don't encourage gambling. This is not gambling. I'm not teaching you how to gamble, right? I don't promote gambling. Trading is not gambling. Trading is calculated risk and using a proper trading strategy and an edge to attain consistent results. Only invest what you can afford to risk. Don't invest what you cannot afford to risk, right? Invest only money that, in fact, in all investment, whether it's trading or whatever investment that you want to make in your life, don't invest what you cannot afford to risk. Otherwise, you're going to put yourself in a big problem, right? I've seen a lot of people do that where they invest money that they are maybe like school fees or something. Like I've heard different stories, man. So I won't advise you to in fact, don't invest any money that you can't afford to risk, right? And also, I'm not a financial advisor. Everything that you do here is at your own risk, right? Get that out of the way. So how do you grow a small trading account fast? Right? So number one, the first thing that you need to ensure that you have, otherwise it's going to be difficult for you to do this and you're going to end up blowing the account, is you need to have a good broker. The broker that you use is very, very important in this, in trying to grow a small account because a bad broker, one, your money is not gonna be safe. That's one. Two, the spreads and the commissions are gonna eat up your account. right? So the worst thing that that can happen to you is for you to have a small account and then the spread and the commission is eating up your accounts without you even doing anything, right? Just taking trades and your account is going down, right? So you need a broker that has tight spreads, right? And has low commissions and also high leverage. This is also very important because you need a high leverage broker because that's what's gonna enable you to trade huge lot sizes on a small account. Otherwise, you're not gonna be able to trade. You're just gonna be stuck with like 0.01, the lowest lot size, or highest maybe 0.02, right? Which is not really gonna grow your account. You're just gonna be making like $1 or cents on a trade, right? So you need a broker that has tight spreads, low commissions, and high leverage. These are the three things that are needed on a good broker in order to grow a small trading account fast, right? So what broker should you be using? The broker that I use and the broker that I used in this video, right? If you look at this video here, the broker that I use is Xness, right? Trying to let it play to the next part, right? So if you look here, you can see this is Xness. Xness, that's the broker that I'm using. As the broker that I use to turn $83 to $2,000. And they are one of the best out there. They're the top broker in Africa at the moment. All the top forex traders, all the top forex influencers are using Xness. So you should be using Xness too. Right. So the link is in the description to create an account using Xness. If you want to create an account, the link is going to be in the description below. So click on the link in the description below and let me guide you on how to create the account. So let me guide you step by step. So go to the description now, click the link in the description and let's create the account. Let me show you how to create the account step by step. So make sure you pay close attention so that you can create the account without any without any errors, right? So let's get started. Right. So when you click the link in the description, it's going to take you to this page where you're going to have to create the account. So welcome to Xness. Create an account, choose the country of residence. So me now I'm in Nigeria, so I'm going to choose Nigeria. Whatever country you're from, put the country in there, put your email address, right? And then put your password. Once you put your password, scroll down, then click here, right? So I declare and confirm that I'm not a citizen or a resident of the US. For tax purposes, right? All the other things are optional. So put your password and then click on continue and create your trading account. Once you have created your trading account, right, it will take you to your dashboard. Now this is going to be your dashboard for your trading account, right? Once you filled out all those information, it's going to take you to this page. This is your dashboard. Now, what you're going to do here is if you look to your left, you can see deposits, withdrawal, transaction history, analytics. These are your tools and everything that you need to your left. And looking here, you're going to see real accounts and then demo accounts, right? Real account, demo account. So if you want to create a demo account, just click on demo and then scroll down and you're going to see where you're going to create a demo account, right? And then if you want a real account, right, you're going to see open a real account. So let me show you how to open the real accounts because that's what you're going to need, right? You're not going to be using demo, you're going to be using real, right? But you can test it out on demo. So open a real account, click on open a real account, right? Choose the account types that you want. I personally am using raw spread, but you can use this one, right? Standard for minimum deposit $10, right? If you have a minimum of $10, you can deposit $10 on this account, right? So click on continue. Right. If you look here, you can see real and demo. So if you want to switch it to demo, just click on demo here, put the account balance that you want to create. If you want it to be a real account, put on real accounts. You can name it whatever account you want to name it. So let's say Dynafx testing, right? Dynafx testing. Set the max leverage to 1,000, to 1 to 2,000, right? 1 to 2,000. If you're able, then you can set it to unlimited. But I think 1 to 2,000 is the allowed one right now. Use MT5. MT5 is the best. Put your password and then create your account. Once you've created your account, you go to your accounts section here. So let me just create the accounts, right? Let's create the accounts. Let's see. All right, so I think everything is set. Yeah, so create an account. All right, so once you've created an account, you're gonna get your account number. So this is the account number you're gonna use to log into your MetaTrader. If you want to see your account details, click on here. All right, so click on these three dots here. Then look for account information. Click on account information. All right, it's gonna show you your server and your MT5 login. So carry the server and paste it on your MetaTrader 5 platform. Also carry the login, paste it on your on your MetaTrader 5 platform, and the password that you're going to use to log in on your MetaTrader 5 is the password that you just put when creating the real account, right? So you're going to put your account there. So this is the account number, right? Which is the same thing as this. So copy it and paste it on your MetaTrader 5. Now, if you want to deposit, you click on deposit here, right? Or you go to your account and click on deposit here. So you can see, click on deposit. Now, you have multiple ways of depositing into your account. You can use bank transfer, you can use bank card, you can use Bitcoin, etc. Right? The one that I personally like to use, I like to use crypto USDT here, and I also like to use bank transfer. Those are the best ones that I would recommend you to use. You can also use your bank card if you want. Also, if you want to withdraw, you need to know how to withdraw your money. If you want to withdraw your money, you can use online bank. You can use this one. I like using this one too, but I prefer this one. This one is very, very fast. The crypto USDT wallet, right? If you want to withdraw your money, you can also withdraw with Bitcoin. Right. So that is how to create your accounts. Make sure to create your accounts with Xness. Deposit a minimum of $10. I would recommend you start from like $30 upwards so that you can be able to use better lot sizes. All right. So once you've created your account, right? Once you've created your account, let's continue with the with how to grow your account fast, how to grow your small account fast, right? So step two is you need to trade volatile assets or pairs. This is also very important because if you're trading pairs that don't move that much, you're not really gonna be able to grow the account fast because the lot size you're going to be using is not really the pips that the way it moves, the average pip movement is not really going to be high. So the lot size that you're going to be using has to be very, very large for you to even see a significant amount of money on your account, right? So good volatile assets and pairs that you should look at is gold, GBP USD, Bitcoin, GBP NZD, and some other currency pairs like Euro NZD and all those other ones. Those are high volatile um assets, high volatile pairs. Gold is the best. It was gold that I used to double the account to flip the account to go from $83 to $2,000. That was what I used on gold, right? You can also use GBP USD and the rest. So trade pairs with minimum 100 pips ADR. So if you're wondering what ADR is basically the average daily range, right? ADR is the average daily range. So if a currency pair moves from here to here and ends the day, right? From here to here, and this is equals to 100 pips. It's equal to 100 pips. And it does this for like maybe like 10 days, right? So that means the average pip movement for this pair is going to be 100 pips. So basically, ADR is the average daily range, the average pip movement that this pair moves per day, right? So look for the ones that move a minimum of 100 days of 100 pips. So if you want to calculate this, just calculate maybe the last 10 to 15 days, how many pips it has gotten for that 10 to 15 days, and then divide it and get your average, right? Then you're going to know how much, if that pair is volatile or not. So this is step two, trade highly volatile currency pairs or assets. Step three is understand that with a small account, risk management doesn't work well, right? So you usually hear people say, use, always use risk management, right? But the thing is, when trading a very small account, right, it's very, very hard to apply proper risk management, right? That's why most people say that in order for you to trade forex properly, you need a big account or a prop firm, right? Because if you have like let's say you have a $10 account or you want to use proper risk management here, it's impossible because if you're risking 0.0, if you're putting 0.01, right, which is the lowest lot size that you can use, 0.01 lots, right, and this moves about 10 pips. Let's say you have a stop loss of 10 pips, 10 pips stop loss, 0.01, right? 0.01, 10 pips stop loss that's going to give you $1, right? So that's going to be equals to $1, right? So if price hits your stop loss, you're going to lose $1, right? You're going to lose $1. So now you just lost $1. Let's say you just lost $1 on your $10 account. You just lost $1 on your $10 account. So now that is what? What is that? You just lost 10% of your account. You just lost 10% of your account, which is quite large when applying risk management because for you to lose 10% of your accounts, that is very, 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 very high, right? When it comes to proper risk management, because most people usually risk 1 to 2% of their accounts, right? 1 to 2% of their accounts. And if they win a trade, they're going to make 2% or 3% or 4%. And if they lose, they're going to lose 1%. But what is 1% of $10? That's like 0 0.1 cents, right? That's 0 0.1 cents. So like you can't really apply proper risk management here. So your proper risk management is basically you over leveraging the accounts. So that's why I said that understand that with the small accounts, risk management goes out the window, right? You can't use proper risk management. The lowest loss size that you can use is already you risking 10% of your accounts. So if you lose 10 trades, you have blown your accounts. So risk management doesn't really work well on small accounts. So always use risk management, right? Always use risk management. But when it comes to small accounts and you're trying to grow your small account fast, you can't use risk management, right? Unless the only way you can use risk management on a small account is if you're just practicing, right? You're practicing your management, you're practicing your strategy or something, right? Then you can use proper risk management just to trade properly. But if you're trying to grow a small account fast, risk management is not really going to work well. That's why it's recommended for most people to start with to trade with the larger size accounts. Right, so technical analysis. Let's get into technical analysis. Let me calm down the speech. Technical analysis, right? This is what this is what's gonna help you enter the trade, and this is the favorite most people's favorite part, right? Technical analysis, how to trade the small accounts, right? So, firstly, these are things that you need to take note of. Firstly, find a good, strong trend, right? Find a strong trend. That's going to be key to your technical analysis. All right. Find a strong trend. Once you found a strong trend, identify your trading setup. So look for your trading setup. Once you found your trend, let's say the trend is to the upside, look for your trading setup that's going to give you a buy. If it's to the downside, look for a trading setup that's going to give you a sell. Right. So identify your trading setup, right? Then enter on the continuation. I'm going to show you how that works on the chart. Then stack your entries, which is similar to entering on the continuation. Stacking your entries on the continuations basically, and scalp, don't hold. Scalp, don't hold. The biggest mistake you're gonna make when trying to grow your small accounts is you trying to hold your trade. You're not meant to hold the trade. You're meant to scalp in and out, in and out, in and out, right? Enter the trade, take your profits and get out. If you stay in that trade for long or too long, one, it's gonna affect you emotionally. Two, you're gonna have huge swings on your accounts, right? So it's gonna be in huge profit, then it's gonna be in drawdown, or the profits are just gonna be dancing all up and down, in large ranges, basically. And three, the trade is just gonna come back and stop you out, right? So scalp, book your profits and get out, right? So now that we've understood what you need to know, let's practicalize it by let's practicalize it by looking at the charts, right? So now you can see my screen. So first of all, let me explain what I just talked about. Let's go to a chart that I've not used. Right, I don't want to clear out my drawings. That's why. So let's go to this chart, right? So let me just show you what I'm talking about. So let's say you are looking for a trade, right? First thing that I told you is identify your trend. Look for your trend. So if let's say you have an uptrend, right? Let's say you have an uptrend, market is trending to the upside. Now, whatever your setup is, now me personally, my setup for a buy trade is where I get Asian session consolidation, right? I look for consolidation during Asian session. I look for price to break out of the box of the Asian session box, right? So this is the box, the high and the low. Price breaks to the downside, gives me a W formation, and I take this up. So I will be looking to buy somewhere in here. So basically, this is where my stop loss is gonna be like here, right? And then take profit is going to be up, right? So this is my setup. So if I'm looking for buys, this is what I'm looking for. If I'm looking for sells, I'm looking for the complete opposite of that. I'm looking for the same consolidation, right, to happen during Asian session, wait for the breakout to the upside, M formation, and take it down. And this is exactly what I traded on gold. I'm going to show you I'm going to show you the trade basically. All right, so I'm going to be looking for sells at this place here, top was above, taking it down. Right, so this is my setup. If I'm looking for buys, this is what I'm looking for. If I'm looking for sells, this is what I'm looking for. Right. So how do we practicalize it? Now, one thing that you need to note when trying to grow your small account is that first of all, we've identified the trend. We've identified a strong trend. Second of all, we've identified a trading setup, right? Thirdly, you enter on the continuation. So now, for example, let's say I have a sell setup, right? I have a sell setup here, right? This is my Asian session consolidation. Price breaks to the upside. We have the M formation that forms. I'm looking to enter on a trade here, right? So let's say you enter on a trade here. Let's say this is your first entry. You enter on a trade here, right? You enter on a trade here. So this is the first trade, first entry. slash main entry. So this is the first entry. This is the main entry. This is where you're meant to put most of your um lot size, or let's say lot size or risk, right? You enter the full lot size here on the main entry, right? My stop loss is usually going to be above, right? So my stop loss is going to be above here like this. So this is going to be the first entry. So now, the way the market works, you guys know market structure. If the market is trending to the downside, if market is going down, it doesn't just go down like this, right? It goes in steps. So basically, you're going to get a low, a high, a lower low, lower high, lower low, lower high, lower low, right? This is the structure of a downtrend, right? And if I'm looking for sales here, then that means I'm expecting price to change from this uptrend to a downtrend, right? So the overall direction is to the downside on the trend. This is a mini trend or mini breakout to the upside. As I'm selling this, I'm expecting price to now start a downtrend, start trending to the downside. So what exactly am I looking for? I'm looking for this pattern to play out, this market structure pattern to play out, right? So if I'm looking for a downtrend with a lower high and lower low, so where am I going to be looking to enter on trades, right? To stack entries, to enter on the continuations. These are the areas I'm going to be looking to enter on continuations, right? I'm going to be looking to enter on continuations on these areas, right? Where you have the pullback, sell here, they push, pull back again, sell here, they push, pull back again, you sell here and take all the entries, taking it down, right? So yes, that's how you're going to be stacking the entries, stacking the continuations, entering on the continuations. And this is usually done on the lower time frame, like the 5 minute time frame or the 3 minute time frame or 1 minute time frame, right? So this whole structure here, my setup shows up on the 15 minute time frame. So for me to enter on the pullbacks, I'll have to zoom in. All right, go lower than the 15-minute time frame, go to a 5 minute time frame or 3 minute time frame and look for these pullbacks, right? To take this down. So basically, what it's going to look like is I'm going to be looking to enter on the pullbacks here. So as this does like this and goes down, all right, I'm going to be looking to enter in here, right? One thing I like to do is I like to enter on the earliest pullbacks, right? So the pullbacks that happen early. If it happens late down here, I won't enter on the pullback because it has gone too far away from this main entry. Shouldn't be too far away from your main entry, right? Should be close to your main entry. And then once you're done stacking the trades, then you wait for it to go in profit, then you scalp it, right? So this is it, right? So I'm going to show you an example of what I'm talking about. But first of all, in order to identify the trend, right? Most of you don't know how to identify trend. Let me show you an easy way, a quick way, not to waste your time, right? With other complex ways of identifying the trend. Let me show you a quick way to identify a trend. So one of the fastest way to identify a trend is to use moving averages. All right. So the moving average you're going to be using the 50 moving average and the the 200 moving average. Right. These are the moving averages you're going to use. So the 50 moving average is the blue. The 50 moving average is the blue EMA, and now they are EMAs, not SMAs, right? EMA, just to clarify, so you don't get confused, right? So this is the 50 EMA and the 200 EMA, right? So the way it works when it comes to trend is to identify a trend, you need the 50 EMA to cross over the 200 EMA to the downside, and the 50 EMA, which is the blue EMA, should be below the 200 EMA, and price also should be below both EMAs. That tells you that it's a downtrend, right? So when price is below the EMAs, that tells you that you're in a downtrend. When price is above the EMAs, as you can see in this example, you can see the 50 EMA is above the 200 EMA, and price is also above the 200 EMA. So that tells you that that's a strong uptrend, right? So that is how to identify your trend. That's an easy way to identify your trend. So if you look here, you can see the EMA crossed over here and we went into an uptrend. The EMA crossed over here and we went to a downtrend. And initially it was an uptrend, right? Initially it was an uptrend. So that's a quick and easy way to identify your trend. So now let me show an example of what I'm talking about with the trade that I took on with the trade that I took today, basically. All right, so I took a couple of trades here, right? I took a trade here on NAS. So this is a sweet buy. Let me go to a different broker so I don't clear out what I just used. All right, so if you can look here, you can see this is my exact pattern for a buy. You can see this is your Asian session consolidation here, right? With another mini consolidation in here. We have a breakout to the downside. We have a W formation, then price reverses to the upside, right? So this is my trading setup. I am looking for buys off of this low of the week here. I'm looking for buys. So what am I going to be doing, right? So this is my main entry, right? So this is my main entry here. Let's type main entry. Main entry. This is my main entry, right? This is my main entry. Let me change the color of that to something you can see. Increase the size a bit. Right, so this is my main entry, right? Then from there, I'm gonna jump on to the 5 minutes or the 3 minute time frame, whatever time frame you want to use, and then look to enter on pullbacks. Now, one thing that you also need to notice that price moves in from zone to zone. So just for a way for you to measure where price might stall or price might consolidate is using levels, using the zones basically. All right, so if you look here, you can see price reacted to this resistance level here. Price reacted to this resistance level here. Didn't really react to this one, but bounced off of it. So you can see broke it, bounced off of it, and went back up. Right, so these are areas where price is going to reverse, and that's where you're going to be looking to even enter more on pullbacks. Right, so now this is the main entry here. What are you going to do? You have a push, pullback, you enter more here, push, pullback, enter more on these pullbacks, right? You can see these are good areas to trade with the trend. So you can see we have our first pullback here, a mini pullback in this area here. We have another pullback here, pullback here, pullback here. So if you know that if this is going to be a winning trade, right? If this is going to be a winning trade, you can surely expect this to continue going up, right? This is going to be a winning trade. So I would say after this area here, after they break out of here, I will not be looking for any other pullbacks because this will be too far from my main entry. This is the best place to enter. This is also a second best place to enter. Here, not so much, right? So if you entered more stacks, if you were stacking trades on these pullbacks at discounted prices, then by the time maybe price got to this area, you would have scalped from here to here, right? You would have scalped from there to there, and that would have been a very nice move. So this is a way to scalp. So you're going to be stacking entries on those pullbacks, either on the 5 minute time frame or on the what is it called, the 3 minute time frame, right? This is the way to scalp on one trade, one winning trade, right? Of course, we know that's not every trade that's going to work out, but on the trades that do work out, you can benefit from them by growing your small accounts and stacking on those entries on the 5 minutes and 3 minute time frame. I won't recommend the 1 minute time frame that much because that one has a lot of noise, but I'll say the 5 minute and 3 minutes is good for stacking your entries, right? And don't forget, don't hold your trades, scalp the trades, right? So that brings us to the end of the video. Make sure to create an account with Xness, deposit a minimum of $10 or anywhere from $30 above. The link is going to be in the description below. Make sure to use the link in the description below to create an account. And if you have any questions, let me know in the comments, and I'll see you guys on the next video. Make sure to like and subscribe. All right, peace.